Okay everyone, and welcome to another quick take video. Today we will be looking at VRX. So it's called Ventnor Resources, but if you go to a different one, and I think on the ASX it's actually VRX Silica, so they may have changed their name. So VRX. All right, so while that's loading, so yeah, it's VRX Silica, not Ventnor. So anyways, investing.com seems to not have updated that. Moving on. So what is it? It's a company, Australian-based mining company. Mainly silica sand. So silica is used for glass, and they produce. So VRX produces high grade silica, and these are used for solar panels. So you need really high grade silica to do that, because you want most of the sunlight to go through and into the I believe is the diode, so then it can invert the energy into electricity. Anyways, that's as much as I know about solar panels, but that's what they are, a mining company in main focus on silica. Cool. All right, so as always, let's go to our financials and go to ratios. Apparently I've been told the volume on here is quite low, so I'm just gonna try to speak a little bit louder. All right, P ratio nothing, industry 28. Okay, that's fine. So that's fine. Quick ratio nothing, current ratio 8. Apparently they pay dividend, so that's always a good sign. Oops. Dividend 6%. That's pretty good. So I'll double check that, probably on ASX right there. All right, leaving that, moving on to our cash flow statement. Internet's really slow today. All right, sure. Let's go to annual. Overview. PE negative. That's probably why investing.com. So investing.com seems to not put in PE ratio if it is negative. Okay, annual yield nothing. Okay, dividends no dividend amount. All right, so I'm not sure what's happening. It should be the same one. Let's double check that. General. All right, Friday trading volume, P ratio negative, net profit. So it's not making any money really. So why are we care to look at it? So it's because these kind of companies, you can get a really if you kind of follow them through, they are high risk companies, just because if they go explore and there's nothing there, and they could put there's a lot of overheads for mining company. But it's always good to look at companies that's different to the one in the headlines, because those are the ones that you can catch early and really grab on to the baseline phase. So there's, in the life cycle of a business, there's phase 1, phase 2, phase 3, and phase 4. Phase 1 is the baseline, phase 2 is the rapid growth, phase 3 is kind of top, phase 4 is the decline. So you want to catch it in at the end of phase 1 and towards the beginning of phase 2, like right now. So if you look at this particular chart, phase 1 ends around here and phase 2 starts around here. So you get a lot more bang for your buck. So you could put in the minimum and really get a good return on that, and then you can cash out and then use that money to invest in other thing. Anyways, just want to double check. So yeah, so while it's loading, so yeah, that's why it's sometimes it's good to look at these smaller companies, and those are not in the spotlight, because again, in my first video I talked about, if it's already in the spotlight, it's already too late, because everyone is going to try to So the momentum traders are probably going to jump in, hype up the price, so then that's how they make the money. It's through the momentum, and they want to like really, you know, shout it out on top of the lungs through a 3 series of megaphones. It's like, hey, buy this company, and that's how they make the money. All right, so sorry about that. Yeah, no, it's definitely the same company. It's just weird. All right, cool. Moving on. Financial cash flow, and you know, when we go into the technical analysis of it, we'll have a look at some tips and tricks I picked up. Okay, cash flow as expected, negative. Well, at least it's less negative. Well, it's more negative here. Well, it's less negative from here. Investing, so it's pouring money into investments, borrowing money, issuance of stock. That's fine as long as it's not debt, so it's fine. So it's paying back some debt. All right, net change in cash, that's okay. So it's looking okay. All right, so let's current asset. We got what? Current. Today internet is mighty slow. Just double check something. Shoot. All right. Balance sheet. Is that what we got? Yep. No, that's fine. Balance sheet. Current asset. Total asset is 10. Current liability is really 0.31. Current asset 2.6. So they do have money to last for, you know, what's that? 8 years. 8 years divided by 0.3. Yeah, okay. So as long as they got some cash, that's fine. Total liabilities 0.4. Total equity 10.616. So yeah, that's not too bad. So let's move on to the income statement. No, I expect that they haven't really made any money, and I found this really cool thing on TradingView that we can have a look at. All right, made no money, operating expense, operating income, net income negative. That's why we haven't got any P ratio on investing.com and negative P ratio on ASX, so that's okay. All right, so again, annual. Total revenue 0.07. That's really is nothing. Negative, yeah. Well, at least it's less negative. So you want to find out what happened here. Why is this net income negative? So operating income negative. So research and development, operating expenses, selling generates. Yep. Okay. So yeah, it's not bad. I think if anything, I can probably put in a minimum amount and just kind of leave it there. But the question is, when do we put the minimum amount in? That's the question we're trying to answer next. Someone, my brother is trying to message me. I'll ignore him for now. Oh boy. All right, now let's have a look. That's fine. All right, sorry about that. Let's move on. All right, so this is the chart, the daily chart. Always check the time frame. And all right, so okay, so it's crossing this. So the MACD is telling me there's it's gonna be a sell. There's a sell signal, and I expect it to be like that. So I wouldn't go in now, not at all. Not even if I'm FOMOing out. If I'm really FOMOing out, I would go in. Let's let's do something. You can add financials in, which is really great, and have a look. Financial. So I always do. Let's do net income, annual net income, and have a look. Cool. So yep, that looks pretty accurate. No net income. So they're just raising money here. I mean, well, not really, because once it's hit the secondary market, it's just the company gets nothing really, unless what they can get is if they issue more shares. But once they sell it on the primary market and they're trying to do it again, and it's traded on the secondary market. The secondary market is what we buy and sell. It's what it does is it doesn't increase the amount of cash they get anymore, but what it does is increase their market capitalization. All right, so let's look at the volume traded. So it looks like what's happening here is a small. So you can see the relative. So I don't need to look at the absolute amount of the absolute volume. You just have to look at the relative. You can see there's a big one, big one, big one. So what we really have here is a small investor just trying to get rid of their stock. That's why I'm slowly moving down. So could be they believe this is the maximum. So again, we're playing a game of psychology here. Believe this is the maximum that for now. So they're just cashing out. And then what we do is probably have to wait a little bit for the MACD signal to, well, my particular MACD is 12, 24, and 9 on the close. And we just probably just going to watch that and see what happens. Now, I talked about a signal thing that, what is it? Some tips that I picked up. Really one, really. So it's called a cup and handle formation. So what it is here, so the best way for me to do this is actually get a snippet of this, new, and just snip that. Missed it. Oh well. Anyways, let's have a look at this. So cup and handle formation, it doesn't always work, but it's something very interesting to. So excuse me. Cup handle formation for this particular one. There's a cup, and it's always basically 1 point, and it goes down and goes back up into like a curved shape of a cup, and then it usually at the same kind of level, and then it has a smaller down before it goes back up. So you can see like it looks like a cup and a handle. That's called cup and handle formation. Anyone who reads Williams O'Neill's book would be very familiar with this. It's very interesting. So I'm just exploring that book and just applying it as I go along. So now, how can we use that? So like anything, nothing is 100%. So you really want to kind of like use as much data as you have to actually figure out when is a good time to buy and stuff. So from the look of the daily chart, so we have a very end here, end to end, same level, and a very short handle. So it does kind of coincide, but then again, hindsight is 2020. Anyway, it does coincide with this buy point on the MACD chart to say, hey, that's a buy signal. So we can use that. And the other thing that William O'Neill talked about is this a change in relative volume traded. So it matches. You got a MACD signal, you got the change in volume on that particular point at the end of a handle. So you can probably say, hey, we'll jump in right here. Let's compare that to this particular signal. There's no signal here on the volume, right? It's a relatively low volume. Well, this is different. So you can say, hey, it doesn't really work. Well, because you got to really collect all the signals to say, right, just because you see the formation doesn't mean anything. You want to see, all the indicators at work, like the ones that you use. So you build up an arsenal of tools that you're going to use to help you to trade. Anyways, if you bought there, that will be 1.25. So you would have 200% returns. That's not bad. You put $500 in, you get 1,500 back. You know, what's the period there? No, we don't need that anymore. Let's have a look. So that's from October to now, 3 months. You know, it's not much, but it's not bad. You know, if you can get that gain repeatedly over and over again, you're doing pretty well for yourself. Anyways, all right, the plan. Wouldn't buy it now. If I'm really FOMOing it, I'll put in the minimum. I wouldn't. So I'm just gonna wait. So it might hit the top for this particular period. It might do a decline. It can do a reform a cup and handle formation. So I'm just gonna observe for that formation to happen, and then along with my MACD signals and see what's going on. Also, you know, watch out on the news. Right, the plan. Don't buy it now. Wait for probably a week, and then I'll review a week to 2 weeks to review this particular company. And that's pretty much it for today's episode of Quick Take. I hope you guys enjoyed it. Again, this is not meant to be a financial advice on any level at all. It's just me kind of keeping a video diary of my trading plan, and everyone should. But if you like what you see, give it a thumbs up, share, comment, subscribe. Again, keep the comments civil. If you want to me to analyze any other company, please put it down on the comment below, and I'll get to it as soon as I can. Thank you so much for watching, guys. Hope you have a great day trading, and all the best and all the success to you all. Cheers.